Hey everybody. Hey, this is me, Darius Anucauskas from Markets.com, and I want to welcome everybody to my regular segment, which is called the Top News, and today we're going to discuss inflation numbers. I know that the market is going crazy, but I've discussed all that already in my morning webinar. You can find the link after this video, at the end of this video, but to my Monday's session, where like I said, where I picked up on all the issues, or you can check out our TradingView page as well and the Markets.com TradingView page, where I also cover in the video ideas, the different scenarios and the different things which are, and everything what's happening right now, what's concerning the tariff wars. But I wanted to pick up on, in this video, I wanted to pick up on the US inflation numbers, which are coming out on Thursday. And I think that people are kind of missing that one right now because, again, due to the what's happening right now with all the issues, trade issues that we're having. Let's put it nicely. Look, before we jump into all that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. But yeah, ladies and gentlemen, I think that the market is right now going through some interesting moments, if I can kindly and nicely put it that way. Look, also before we jump into all that stuff, let's quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So yeah, look, I wanted to show you this chart first. I mean, I wanted to show you what's happening with the indices. If you somehow missed it, but I don't know how. But anyway, the situation right now here is that we're seeing a nice rebound. Now, I talked in my webinars recently on Monday that we did a nice correction here. And yesterday, for example, my target has been reached. I was aiming for that 50% retracement on the Fibonacci, which is drawn from the lowest point of 2022 to the current highest point of this year, basically the all-time high, and that applies across all three major indices: the U.S., the Dow Jones Industrial Average, the S&P 500 as well. Similar story. We did a nice, beautiful rebound, and Nasdaq 100. So. But the main thing right now is, if we're talking about purely from the technical perspective, is that we're getting a hold up near this 38.2%. So we cleared it, but we still remain below it. The same story is on the S&P. We're kind of flirting with that 38.2, and the same story is on the Dow. We're also flirting with that 38.2. Now, of course, the market right now is taking a pause. Everybody's now trying to figure out what kind of what kind of a decline are we getting. Is it one of those which we had like back in 2020 when before COVID hit? Or where's that big dip? There we go. From where we then rally and then go for a new all-time high, or is it something actually more severe like the 2008 2009 issue? So in my opinion, at the moment we're going through this I think there could be some more declines to come. Yes, we're going to recover a little bit more maybe, but I think that this is going to be just to show, to try to convince some of the people that, look, everything's fine, everything's okay. But then I think we could sell off one more time, because the only person who can change anything right now is the one who's imposing tariffs, because it seems like the market doesn't really care about anything else apart from those tariffs and what kind of a reaction it will be from other countries. Now, the thing is that at the moment the positivity here is kicking in, because I think that, as I understand, that many countries are trying to reach out to the U.S. administration and trying to make a deal, because that's apparently what the current U.S. administration wants. So that's why for now we're seeing some positivity, and maybe this news could travel some a little bit more. But then look, keep your eyes on the economic calendar, and let me just jump in straight into Thursday, and that's when the US CPIs are coming out. And this is something that probably the market is missing out right now and kind of ignoring, but it's a key important metric to monitor, because again, the U.S. inflation has, did start to tick back down a little bit. So last reading that we got was the 2.8%. Where's that down? That's the prior one. And now the headline year-on-year inflation is expected to drop again. So we're kind of seeing a little bit of a decline. And in a way, I think that it could still be the case that we could, see a lower than the previous number. I don't know if it's going to be lower than the forecast, but because the forecast is already on the lower side, and the 2.6 kind of seems a little bit like reasonable. The same story is on the core. Okay, the core here is expected to, to see a decline here, like by 0.1%. But again, let's not forget that this one includes. Excludes food and energy prices, and this number is coming out for March. Now, if we look at very quickly at the situation with WTI oil, where's that oil? There we go. So you can see that we are selling off, right? However, in March, we have been kind of pushing a little bit to the upside. So it's just that at the beginning of April we sold off. So basically the next number, the next inflation figure, which is going to be coming out in May, now that one could be a little bit more on the lower side in terms of the core figure. But the question is what's going to happen with the not the core figure, the headline figure. With the core figure, because it excludes oil, so the headline could be on the lower side, the core figure could be a little bit on the higher side, but that's more towards May, when we will be getting the reading in May, where we could see the core figure actually not changing or even coming out higher, because it excludes food and energy. But the thing is that with the headline, because it includes food and energy, now yes, oil did decline in March, in April, but in March it did push higher. So in a way, I'm kind of leaning a little bit more towards the upper side here. So yes, the 2.6 kind of seems reasonable. So in a way, I'm actually advocating for something like a 2 points between the 2.6 and 2.8. I know there's not a lot of place to maneuver like 2.7, right? But either 2.6, 2.7, or 2.8, that's kind of, I'm even actually thinking that it might come out on the higher side, because the headline inflation, because it includes fuel costs. And looking at oil here, in the month of March, it did push higher for the whole month, almost for the whole month of March. Let me just put a monthly chart actually. So this is what I'm talking about. So here we were in positive territory, but will that be enough to kind of raise the headline inflation number? Well, let's wait and see. I think that this is that it might have just kind of had enough strength. So the 2.6. That looks quite reasonable, to be honest. But if we're taking into consideration that oil did push a little bit higher, then 2.8 could be the case as well. Basically, where the inflation stays the same. If somehow inflation comes out higher than the previous figure at 2.8, and it comes out, let's say, 2.93. Okay, now this is where the market could actually worry, and this is where we could start seeing these deeper, maybe the corrections back down, or not even corrections, a continuation slide here, because at the moment we're seeing, from the short-term perspective, we're seeing a correction back up. But from the short-term perspective, we could see this like if inflation comes out on the higher side a little bit, then this is where like, the problem arises, and the market could actually panic on this, just because saying, look, oh my God, look, tariffs are doing this and blah blah blah. Although everything started kicking in only in April, and we still have still need to go through April at least to see some sort of like what kind of results are we getting. But the initial fear could kick in, so that's why I'm kind of carefully monitoring the numbers here. If those come out on the higher side, let's say by somehow, if they come out higher than 2.8 here on the headline, and if it comes out higher than 3.1 on the core, because if the core comes out higher, then not only that the rise in oil kind of helped the or sorry, the other way around. If the core comes out higher, then that means that despite the rise in oil, because again this number does not include that, we could see a drift in services. That means that the services did become more expensive, and this is where again fear could kick in, because again people would start thinking that, look, although yes, tariffs did not happen, or let's say kick in yet in March, people were already getting very cautious and maybe ramping up prices a little bit to control, or let's say to in order to survive or something, because they knew what's coming up, that this is coming up in April, and that's why they're ramping up prices already, that to in order to safeguard themselves. And like I said, this could be an issue, and this is where we could see, the Fed, and this is something that we're watching, and I think that the Fed will be watching, although I get it, the Fed's favorite inflation metric is the PCE, but, where is that? Come on, load up. But again, at the moment, if we look at this Fed Watch tool, we're pricing in like 5 cuts right now by the end of this year. 5 cuts. I mean, I doubt that this will happen, but because especially if inflation starts picking up, I think that this will diminish back to 4, maybe 3, at least for now. But the one that's concerning me right now is this one. So if inflation, like I said, does pick up, and right now at this point, we could see where's that? We could see this one kind of remaining the same as current interest rate. We basically, for the May meeting, we might skip the potential idea of a cut. However, the way this could play out with the stock market, yes, the stock market could decline again if inflation comes out on the higher side, but what could help here is it could help the US dollar to kind of push back up a little bit here. However, again, it's a very difficult moment in my opinion. At the moment, there is we're seeing a dollar recovery at the moment, but again, will that be enough? Will the inflation numbers help the dollar to recover even more? That's, like I said, that's a good question, but with the inflation numbers, like I said, if they come out on the lower side, maybe this is where the situation that the Fed could then stick to these forthcoming cuts. And this is where the US dollar could be hit a little bit. Now, another kind of theory that runs into my head right now is that in order to, because we're the current administration is going for those not rate, these tariffs and everything. Maybe they do need a weaker dollar a little bit, because in order to make their exports a little bit more attractive, and make other currencies more expensive, so so that companies in the US would not go and purchase anything like abroad. So that's another kind of thought. So, and for that, like I said, the inflation number, If it comes out on the lower side, this could be, like I said, this could be not very beneficial for the US dollar. So again, let's see how this is going to play out, of course. But at the moment, there's a lot to take in, unfortunately. And I think that the stock market could right now just kind of stall a little bit. Maybe tomorrow, we're going to see just some sideways action. And then once the CPIs come out, then the market will take the decision. I'm really, like I said, I'm really curious. Unfortunately, nobody has a crystal ball, and nobody knows, apart from the ones who are releasing the numbers, of course, and a very few who already know the kind of numbers are we going to get. But in general, for us, the regular public, we'll continue monitoring the situation. And I always say to everybody, look, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. So if something doesn't tick, if not all your boxes are ticked in your strategy, just don't touch the market, okay? But yeah, look, I mean, this is, like I said, this is something to keep in mind. Again, once again, core inflation is expected, core and headline inflations are expected to drift a little bit lower. But I'm very going to be interested to see the core one, because it doesn't exclude, it does exclude oil, energy prices. So, and energy in March did, WTI oil, for example, pushed a little bit higher in the month of March. So the headline figure could go a little bit on the higher side, but the core, because it excludes WTI oil, if it comes out on the higher side, that means that, like I said, companies are, in general, everybody's trying to pass on potential headwinds. The company's already doing that first step, like before anything can happen. They already are like ramping up the prices in order to kind of protect themselves, maybe to safeguard themselves for the upcoming tariffs, which kind of already kicked in. So, but that's, again, because I'm talking about March, we're getting the March figures. So, ladies and gentlemen, thank you very much. I hope you found this useful. Let me know in the comments what you think, if you agree or you don't agree. In general, if you want to share some thoughts, I'm always welcomed. And yeah, I'll see you later with another video from me, Darius Anucauskas, and for another video for the top news segment that we're running here on Markets.com. Thank you very much, ladies and gentlemen, and I'll see you later. Bye-bye.